they lied to you about trendline trading. They lied to you saying it doesn't work. Well, in this video, I'm going to show you exactly how I trade trend lines, how I've made multiple six figures trading trend lines, and how you could easily replicate it for yourself. If you guys don't know me already, my name's Ethan Palagonia. I'm just a normal dude who trades, but I luckily found success in trading, and now I try to share the information I have with others so they could see the success also, because I know how it is. Trading is a very hard journey. It's very hard. It took me 3 years to become profitable. So if I could just shorten that time span for at least one person, that makes me happy. So let's dive into it. I don't want to waste your guys' time. Now this video is going to be short because trendline trading is so simple. So I'm going to show you guys a trade that I took and the rules I go about trendline trading. Okay, so the first thing to always know is that trendline trades are always counter trend trades, and doesn't need to be that doesn't mean it's going to be counter trend for the overall bias, but the current market conditions for the time frame that you are on, it's going to be counter trend. Okay, I like trading on the 5 minute time frame. I'm a scalper, so that means all of my trades are always going to be on the 5 minute, and all of my trend lines are going to be on the 5 minute. So for on this trade example, if I drew this trade, I'm looking for a counter trend trade. As you can see, we're moving bearish right here, right? Price is moving down. So that being said, we're gonna draw a trend line marking out highs, expecting a counter trend break. Okay. And the second thing to account for is that we always draw trend lines on the first two highs or lows made. Okay, so this is where we start going into how we actually trade it. So as you guys saw or see right here on this trade that I took, we have a low made right here, and we have a low made right here. Yes, there's a bunch of, or a high, sorry, we have a high made right here, high made right here. And yes, we have a bunch of other highs right here, right here, right here. But when you start the trend line, you want to find a high, or in this case, find a high, right? You want to identify you a high that you want to use that is recent. Ideally, we're taking the two most recent highs, okay? That's how I go about things. So if I'm looking at price right here, these are the two most recent highs. So I draw it from the highest, the high made, the first one, and then the second one. There are several times where people will just automatically see a trend line and draw it to fit at market conditions like this or whatever. That's just not how I do it. I identify the two most recent highs, and then I mark them out on the trend line. I wait for price to identify or eventually break that trend line and give us a big impulse in the opposing direction. And the reason I like trend line breakout trades is because, compared to a normal breakout trade where you're taking a break of structure, this could happen before that break of structure. As you can see, if you're taking this break of structure right here, we got a slightly better entry, right? If you were to take this break of structure right here and wait for candle closure, your entry would have been up here. But because of our trend line, we were able to get an entry a little bit before that break of structure, which just in turn gives us a better entry, allows us to make more money, and potentially allows our stop loss to be in a safer place. Okay, so we're always identifying the most recent highs or lows, and we're drawing the trend line to those. Okay, so as you can see right here, price was moving down. We identified this high and this high, we drew the trend line, and simply just took the candle closure, breaking that trend line. And for a profit target, I just identified an area in the market where price can reverse. Okay, so this could be supply and demand zone, support and resistance, support and resistance. I saw this very strong support and resistance zone that's just been, holding the market for a while, right? We came up right here, rejected, rejected, and then we held that support right here. And then knowing that there's a good chance that price could reverse at that point or at least have some rejection. So I just took my profits at this point in the market. And as far as stop losses goes, everyone has different ways of putting stop loss. I like using a fixed stop loss, but you could also use a stop loss below the candle low that broke out of that trend line. That's oftentimes what I do because I don't like having a trend line entry where my stop loss is in an unsafe area, because say our stop loss is right here, obviously that's tiny, but say our entry ended up being up here and our stop loss is right here, I think that's unsafe because price could come down, retest that trend line, and then go up and then stop you out when retest. So ideally your stop loss is below where the trend line is. So I like having it below that initial candle that broke out at that wick right there. Okay, so that gives you room for price to give you that retest like right here if it wants to hit the trend line again and then continue in your favor. So we're gonna look at a few more examples. I'm just gonna go on the chart and try to find some for you guys. Okay, right here I see one. We have our initial low right here, and we have we have the first low right here, and we have the second low made I don't count this as a low because that's just consolidation, no clear movement. This could be a low right here. So in this case, you're going to come into this situation a lot. In this case where price violates it and it goes back up, I would not even want to enter. I wouldn't even consider this a valid trade, right? This is before market session open. This is a 5:40 in the morning. So I would just discard that trend line. So then I'm looking at the most recent ones. Okay, we have this initial low and we have these lows right here. Bam, this is during session. So price of wicking. So bam, once again, I always say the most recent highs or lows to most. So this is the most recent low, first one, and then this is the second most recent low right here. So we're going to mark that out and wait for a closure below. Obviously, price closed way down here. I would not have entered that trade because this is a massive, massive stop loss. You don't want to have a stop loss that big. And this is also forming a fair value gap between this candle and that candle. That allows price to come up and stop you out. If you had a stop loss over here, you just get clapped. So in this case, I would have just avoided that trade, but there's a setup that would have played out, right? I just wanted to show you guys that example, and that's just me holding off on a trade, even though it won. So let's look at another example again. These setups form very often, okay? We have, this is all consolidation. I'm not considering the structure. There's no low or anything to take this trend line trade. Nothing really happened right there. Sometimes, I see people, and some people in my mentorship, obviously, you don't want to just completely copy somebody's system verbatim. You want to make it your own a little bit. So sometimes people in my mentorship, they'll, go a little further back and draw a trend line. Right there would not have worked because it got violated before market session open. So then they would just do that. And then same thing happened here, gave a huge impulse. You wouldn't have entered that trade. Just an example, right? Let's look at more trades, okay? Market's just been giving crazy impulses. So let's look at this. We have, the overall low down here, giving that trend line. I'm not really worried about that trend line much. There's this low though that was made, even though it was made during consolidation. You can mark this low and then have that little miniature low right there, okay? Or you could go on this miniature low and use this one right here. It's all up to you, right? I would have just had this because it's a little safer, and it would have gave the same breakout, okay? So price made that impulse up, but then ended up falling down, giving a perfect candle closure right there. You could have put your stop loss right there, target either target liquidity or support and resistance zones. So I know that there's a bunch of liquidity sitting at these lows. These are London lows, and that's a perfect 2.8 R. So you could catch a perfect reversal trade right there. Okay, does that make sense to you guys? Like, we're just identifying the two lows. I always draw it with two things, okay? As long as it has two lows, then you draw it, and then you just extend it out. You don't adjust it to current market structure. Like, I could have just moved this up to adjust it to that low, but I keep at those two and wait for price to actually break it. Okay, so these setups happen pretty often. Once again, I'm doing it on on YM, NQ, and the S&P, or US 30, NASDAQ, and the S&P 500. So, if you have all three pairs, there's a lot of setups that happen, and you'll probably be able to catch a trade almost every day. So I hope this video gave you guys some value. If you guys want to learn more on it, you could message me on Instagram, or I could link something below just for you guys to talk to me, and then we see if you guys need more help. But other than that, guys, yeah, make sure to follow me on Instagram too. I'm very active on Instagram, so if you guys just want to stay in loop with my life, or whenever new videos come out or whatever, just follow the Instagram and you can message me whenever. And that's about it, guys.